In this next trading example, we're going to take a look at a crude oil long setup. The key points to pay attention to in this trading example include the strong move away from the area of interest, the price level that we wanted to buy at. Previously had a big rally up away from that level, indicating that there were strong buyers in that zone. We're trading in the direction of the bigger time frame. Prices had pulled back into an area where previously they rallied up from, so we were buying after a pullback in prices, and that's what you want to look for. We also used our previous day close in conjunction with the buying opportunity or base that we looked for, the formation of candles, and use that to add to the conviction of the trade. So let's take a look at the chart itself and see what this looks like and why we chose this trade. Okay, first things to pay attention to. We have multiple time frames here that we're looking at. We always have multiple time frames. So that's something you guys are going to want to take into account and utilize yourself. Use multiple time frames. We learned this in the course. Being able to get different views of the market allows us to fine tune the opportunities, take the lowest risk, highest probability trades. So number one, we have multiple time frames that work together to add to our conviction level in the trade. Okay. So off the daily chart, you can see prices had dropped, pulled back into an area where previously they had rallied up from. So if we get a pullback in price, that's when we want to look for buying opportunities. We saw that the market was attempting to base out around this 49 level with plenty of profit potential to the upside. There's one little area right in here, $51, that may be a speed bump, but ultimately getting back up to this $53, $54 level was the idea. And this also worked out for a swing trade as well, and so you can utilize your multiple time frame analysis not only for day trades but also swing trades, and it kind of goes hand in hand when you're looking at the market environment and what type of trade you should be looking for on a day trading basis. That's going to give you an idea also of what the market may do bigger picture and vice versa. So you want to use the bigger time frames to locate smaller time frame opportunities, and you can use the smaller time frame opportunities to fine tune your bigger picture ideas. Now getting into the exact chart that we used for the entry, you can see the entry was labeled in here from this 49.61 down to 49.51. Basically right smack dab in the middle is this 49.56, which is our previous close, and we talked about that earlier. So this adds to the conviction of our trade. And again, why do we pay attention to these price levels? Previous close, open, the highs, the lows from previous days, the overnight low, the overnight high. It's because these price levels can produce turning points. You're trading against other traders. Traders will do things at these price levels. And if there's an opportunity that coincides with one of these price levels, it just adds to the conviction of the trade. It doesn't mean it's going to work, but it does give us a higher confidence level. So if you were going to trade with, let's say, a one lot, if you got all of these factors that added to this trade, you may want to up your position size kind of thing. That's what I say when we add to the conviction of the trade, it adds to the confidence, and the confidence can add, if your trading plan allows, add multiple positions to a trade. Multiple contracts, in this case, since we were trading futures. So you can see that we have the previous close area. Bigger picture, we were looking for a buying opportunity, so we wanted to wait for prices to pull back. You had some buying activity up here that took prices away from this level even further, and price had not been back to this level since this little basing formed, right? So this is the first time that price will be back to this area. So we need to see the pullback. Once the pullback comes, we identify an area and basically limit our risk. And then we have to look at the profit target, the profit potential, to see if that meets our criteria. We want to have at least a 2-to-1, 3-to-1 risk to reward ratio or higher. So with this opportunity, 49.61, let's say that's the entry. 49.83 was our target. Basically right below this area or this base right in here at this 49.90. Why? Well, big round number one of 50 can act as resistance. You can see touched here at 50, reversed, got above 50, couldn't stay there, traded below it, got back up to 50, fell away from that level. So big round numbers are something you want to pay attention to and can use in conjunction with profit targets or as profit targets. But we were looking at this area right in here where prices had an impulse move up further away from our price level. Once it retraced, it actually broke down further. Sellers came in, pushed this thing down, and so that was a natural profit target for us. Meaning we wanted to at least take some winning portion of our trade off here in case prices never were able to get back above this level. So that was our profit target. And it was about a 2-to-1 risk to reward ratio. Profit target 2 was that $50 level, a little bit higher. And then profit target 3 was, you can see on the 60-minute, much higher, up closer to 50, 60. But if you take a look at the daily, these are for swing trades and day trades, but bigger picture trades, the profit target was closer to 51 and then all the way back up at 53. But what we were looking at, like I said, we had a 2-to-1 risk to reward ratio off of this 1500 tick chart. We were buying after a pullback in price. We were buying after a pullback in price. We used the previous close. We found an area where prices left in a strong fashion. Prices had not been back to this level since the formation of this little base. And so we were able to limit our risk, have a nice risk to reward opportunity, and that's what set up the trade. If you guys need help, if you need to go back over some sections to understand why we're looking at these things, and if you're missing any of the concepts while we're going through these examples, in this particular setup, you can review section 1 and 3. So if you're having any trouble, just go back to those sections in the course and brush up on anything that you need.